Folks, welcome back to another episode of T2 SMC Trader. Make sure that you have watched until the end of this video because you are going to learn a deeper price action. After watching this video, a lot of things will be clear to you, so that make sure that you have given me the thumbs up, and obviously if you are new, don't forget to subscribe to this channel. This channel is going to provide you the real price action reading. So you are going to learn the real ICT concept by this channel. I keep uploading the videos that actually help you to understand this market more clear way. Let's go to the price action. Over here, this is the 15-minute chart for Nasdaq. Today is Monday. I'm here with after the Monday session. So here you can see this all the sell side liquidity over there. At the end of the video, I will show you all the execution. So that all the sell side liquidity, this low and that low, they are relatively equal lows, a very clean sell side liquidity over here. And this is the last fair value gap above this sell side liquidity. There is no other fair value gap except this one. So this is the last fair value gap. But this fair value gap has been traded already. Why I'm gonna use this one? This fair value gap didn't traded by the body fully. So there is a little portion is still open. So I will keep using this fair value gap until it is perfectly closed by body. So just keep that in your mind. This is the last fair value gap just above this sell side liquidity. That means this fair value gap can hold the price, send it back for the high one more time. Okay, one more time or maybe a lot of times until it's not perfectly closed by body. Now over here, this is that last fair value gap. This is the sell side liquidity. Let's come from here. What happened around that area? This is the new day opening gap and the last fair value gap just below this new day opening gap. You can see market has been traded the constant encroachment of that last fair value gap. Then market tapped the lower part of this last fair value gap, then fall. Before falling, what it left? Buy side liquidity. This high and that high. They are relatively equal highs, very clean highs. Okay, so I have this buy side liquidity over there. Now I'm going to remove this last fair value gap from 15-minute chart. You have just seen that there was the last fair value gap because I just need the buy side liquidity so that my chart is cleaner. You will understand that. Okay. Below this buy side liquidity, this is the last fair value gap. Remember, above this sell side liquidity, I have this last fair value gap. Same thing over here. Below this buy side liquidity, this is the last fair value gap. If this last fair value gap is broken, what I'm going to think, market is going to take the buy side liquidity. If this last fair value gap is broken by body, I will start to think that market is going to take the sell side liquidity. It's not going to reverse. Same logic over here. Then market actually fall and made this last fair value gap. It has traded this last fair value gap. After trading this last fair value gap, market fall. Dramatically it fall. But look over here, take a closer look. Okay, this was inside the morning session, New York morning session. If market would really love to take that buy side liquidity, how should it take it? It should close above this last fair value gap from 15-minute chart. Then I will start to think that market is not going to take this sell side liquidity. Instead of that, market is going to take that buy side liquidity. When market hold or this last fair value gap hold the price, there is no other fair value gap above this fair value gap. See, then market fall. Where did it came? To this last fair value gap. Am I going to take sell from there? No. Why? Because this last fair value gap is not broken yet. So look over here. Just don't focus over that price action. Instead of that, look over here. Look, this thing and that thing are the same. Yeah, weak closed inside this last fair value gap. Here weak closed below the last fair value gap. Doesn't matter. We care about the bodies. So if the body failed to close below this last fair value gap, that means it's still not broken. That means market can still reverse for the buy side liquidity. You can't look for sell over here. After trading that area, market come back again to this order block, the highest up close body close candle. Why that one is the order block? Around here, market has taken some buy side liquidity. Then very nice market structure shift, fair value gap. Price has traded this fair value gap. This line or this candle has traded this fair value gap. where is your highest up close body close candle? This is your highest up close body close candle. But I have some order block over there. Why I'm not marking them? Because they have done their job before. That means when there was the entry fair value gap, market trade that entry fair value gap. This order block, look over here, the highest up close body close candle. This order block hold the price, send it back for the sell side liquidity. Above this sell side liquidity, I had some other sell side liquidity around that area. So let me mark that sell side liquidity over here. So this is the sell side liquidity. Okay. So just let me mark it clear. Okay. So after trading this parallel gap around that area, the order block, boom, market went lower, take this sell side liquidity. That means this entry parallel gap has done its job. The order block has done its job. One more time, price reach until the last parallel gap. Here, this is that order block, new order block. At the same time, you can say this is the propulsion block as well, but I would love to call it the order block, but it's propulsion block as well. Okay. Then market tapped to this order block, very nice way, went lower one more time, tried to reach higher one more time, failed to reach over there, fall. How did it fall? Closed below this last parallel gap. This candle has closed below this last parallel gap. What does it mean? When this last parallel gap is broken around that area, what should you look for? You should only look for the sell side liquidity. You can't frame a buy setup over there. But brother, if I really would love to make a buy setup, how should I look for that buy? Because I have still this buy side liquidity. That means market can leave this sell side liquidity and it can take that buy side liquidity as well. How can I change my direction? If you want to change your direction, what you have to do? You have to wait for a bullish fair value gap from 15-minute chart. And that bullish fair value gap should have created above this last fair value gap. Then market will tap to this bullish fair value gap. You will be in a 1-minute chart, and then from 1-minute chart you will start to look for a setup from above this last fair value gap. So you can't look for a buy setup when market is below this last fair value gap. What do I mean by that? Look, market came here, was very near to this sell side liquidity from 15-minute chart. Okay, so don't forget about this sell side liquidity. Let me show you one more time. This low and that low, they are relatively equal lows, and then market came here, failed to take that sell side liquidity, made this sell side liquidity strongest. So this is my strongest liquidity. Then market started to go higher. When it started to go high, it has made a bullish fair value gap from 15-minute chart. Okay, so this is that bullish fair value gap. Then price come here to this fair value gap, bullish fair value gap. Should you look for a buy from there? No, you can't look for a buy from there. Why? Because above this sell side liquidity, you have this only last fair value gap. So if you want to look for a buy, you have to wait to create this bullish fair value gap above this last fair value gap. Then and only then you will be able to frame a buy setup until this buy side liquidity. Does it clear? I mean, is it clear to you, brother? This is simple logic. If you understand this simple logic, trading is gonna be very easy for you. Okay, I will show you the execution, don't worry. And I outlined everything in my live and in my Twitter. So it's nothing is hindsight. Over here, this bullish fair value gap, I really don't care about this bullish fair value gap because this bullish fair value gap created below this last fair value gap. For example, if you are this market, okay, closed above this last fair value gap, for example, it closed above there, and then suddenly it has made a bearish fair value gap over here before taking this buy side liquidity. Am I going to take sell from there? No, I'm not going to take sell from there. Instead of that, I will wait to make a bearish fair value gap below this fair value gap. So first market closed over there, then market came back again, made a bearish fair value gap around that area. Then I will think that this bearish fair value gap is going to hold and market is going to take that sell side liquidity. Okay, so if there is a bearish fair value gap, I don't care about that. This is how I actually mark my direction and I get so confident. I have tweeted that if any of you are looking for buy around that area, please unfollow me. What is the reason why I was so confident that market is not going higher? The reason is it is in below this last fair value gap. This ICT concept is really so beautiful and so algorithmic. Okay, so there is nothing which is random. Everything has the logic. So if you want to work with the logic, trust me, you will be benefited and you will be a very nice and uh, profitable trader. Okay, consistently profitable trader. So make sure that you are understanding this part perfectly, because after, when I'll be in 1 minute chart, I will talk a lot about the price action which you should understand perfectly and you should follow them. Okay, so make sure that you are getting my point. So when market is below this last parallel gap, all I'm looking for sell only. I don't care about the buy below this last parallel gap. Then market went higher. This bull run, do I need to take participate in that bull run? No, I should not do that. Where market reach until the low of this last parallel gap. Now look at the bodies. It closed to the low of this last parallel gap. Then how beautifully it fall. You have to think about this type of reaction from the low, constant cosmet, and the high. This last parallel gap is now working as an inversion parallel gap. At the same time, what else do you see? If you take a closer look to that leg over there, you will see the entry parallel gap over here. So this is your entry parallel gap. It's a very small, but still this is the entry parallel gap, and this is your breakaway gap. Now, if you were with me in my Twitter, you have seen that I have marked this one long time ago as a breakaway gap. That means I really don't want to see that market will reach until this breakaway gap. Instead of that, it tapped to this entry bearish parallel gap, then fall. Look closely the bodies, how it closed inside this entry parallel gap perfectly, right? That means this entry parallel gap holding the price perfectly, send it back. Why? To take this sell side liquidity. This is how my direction is so confident. Okay, I'm so confident about my direction because I'm using the simple logic from ICT. I learned it from ICT, and I'm trying to teach you this simple concept so that you will be able to frame, to make sure that your direction is also so clean. So over here, it tapped to this bearish parallel gap, entry parallel gap, last parallel gap. Tap to this entry parallel gap. At the same time, this bullish last parallel gap is working as an inversion parallel gap. It's not working to the upper portion of this parallel gap. Instead of that, it's working to the lower portion of this in last parallel gap. And market, the bodies didn't even close inside this last parallel gap. It just tapped to the low and then fall. Perfectly, it fall. So when market you are below this last parallel gap, you will keep looking for sell. When you are above this last parallel gap, you will keep looking for buy. Just simple logic. Okay. If you are with me in my Twitter and to my live, I have already explained this thing and what happened over there in my live streaming. I outlined live setup. You saw how beautiful that was. So here I am now going to 1 minute chart for the PM session. Now I'm in 1 minute chart from the PM session. So PM session start around 1. Okay, so here the PM session has started over there. Now, if you take a closer look over here, what happened? This is called time distortion. Okay, so market from 11 to until the 12:37, it was wasting time. Why it was wasting time? Because it has to close just below this sell side liquidity by today. So if it has done it beforehand, around the lunch hour, what is it going to do around the PM session? That is why it was wasting time around that again. Then after 12:37 it fall. When it was falling over there, are you willing to take sell? No, you should not look for sell. Obviously you can look for sell, but you have to make sure that you are in the session. Okay, you are not outside of the session. This is the lunch hour. I don't prefer you to look for any kind of setup around the lunch hour. So obviously you can look for sell or buy, it's up to you, but you should not do that because this is lunch hour. After the lunch hour, here, this is the candle where it came to this last parallel. Okay, so it came almost the end of this 15-minute last parallel, then went higher. When it started to go high, are you willing to take buy? No, you should not look for buy over there. The reason is market has already done a lot of job over here, so it didn't take that buy side liquidity over here, and last fair value gap was holding the price by perfection. Lower rejection, consonant consonant rejection, order block test, then worked with the propulsion block perfectly. It fall, closed here, it closed below this 15-minute fair value gap, last fair value gap from 15-minute chart. So I will start to look for a sell setup now. Suddenly I have seen that market is going higher. When it is going higher, do I really care about that? I don't care about that, because even if it would love to go high, I know how to frame the setup. I will wait for a bullish 50-minute fair value gap above this last fair value gap, then I will start to look for buy. Until then, I don't have any opportunity to look for buy. Instead of that, I will keep looking for sell. So finally, you can see this was the market structure sheet. So let me mark this market structure sheet here. That was a market structure. Is that valid? Absolutely, it's a valid market structure sheet. That was a swing. Look at this swing, okay, and this low has traded this fair value gap. Then I got this displacement, okay. When I got this thing, I had this fair value gap over here. So this was the fair value gap around that area. This also very small fair value gap, but still there was a fair value gap. And look at the bodies. Look over here where the body closed inside this fair value gap. Yeah, the wick went too much. I really didn't expect that one, but it went too much. But tap to this fair value gap, boom, market went lower. And yeah, it didn't take this sell side liquidity. But what did I say? Never ever target your extreme liquidity. Instead of that, try to catch some small liquidity from 1 minute chart. Now from 1 minute chart, you can target this low. Simply, you can just target this low as your target. Now if you take your entry over here to this fair value gap, and if you cover your stop loss just above this one, above the swing high, and if you just target over there, it's not gonna be a very nice setup, right? 1:1.5. This is kind of 1:1.5, not a good setup. Okay, I agree with you. Then what happened? Market went higher again one more time. I mean, spent a little more time, make relatively equal highs over there. New buy side liquidity. Where is this buy side liquidity? Just below this last fair value gap. Below this last fair value gap. At the same time, this is that bearish fair value gap. Remember, it didn't trade it yet. So you know, even if market doesn't take this sell side liquidity, then you will have another opportunity to take a sell from this fair value gap, from this entry fair value gap. Then market went lower. There was a market structure sheet. After making this buy side liquidity, gave you the market structure sheet. Here is your fair value gap. Over there, let me mark the fair value gap around that area. This is the fair value gap. Then market fall. Now you can say, why brother, why market didn't take that high? It has made this buy side liquidity. So how can I frame my setup over there? This is why I told that history repeats. Why history repeats? Why do I tell that? Look over here. This high and that high. Okay, over there. Market failed to take that high. Look, closer look. Okay, take a closer look. What happened over there? So you have an experience already that market is leaving the buy side liquidity. Okay, this buy side liquidity is from 15-minute chart, and this thing happened in 1 minute chart. But aren't the same? Absolutely, they are the same. Okay, so here this is from 1 minute chart. Now I wasn't sure that market is actually respecting it or not, so I didn't take this sell from there. Why? What is the another reason? Though this was a very nice market structure sheet, but market took too long to reach to this fair value gap. So 1, 2, 3. Number 4 candle reach until over here. If this candle, number 3 candle, could reach until that area, I would take that sell from there. Okay, I would take that sell. My stop loss would be above here, and my target will be below this low around here, because from 1 minute chart I don't have any other opportunity to look for a sell or sell side except this sell side liquidity, extreme sell side liquidity. So that could be my trade. 1 is to 2.55. Was it bad? No, absolutely not. But here it takes 4 minutes to reach until that area. So it's not immediate reaction. Now, as I told, always try to understand the immediate reaction. Immediate reaction is always good, okay? And it will never give you the disease. You will always get the perfection from the immediate reaction. So I didn't I didn't participate to that price action. Instead of that, I was waiting. What's for? I was waiting to look for another market structure shift. But at the same time, if you look over here, what happened? Market trade that on. Where is your highest up close body close candle? Here, look at this, your highest up close body close candle. What is that? Your order block. So market has traded this order block. Where market is reaching for this sell side liquidity. You know that perfect way, that market is reaching for that sell side liquidity. It has traded this order block, then another market structure shift. I got another market structure shift over here. So this was another market structure shift, and let me remove this one as well. Okay, another market structure shift, another fair value gap over here. But brother, I'm too late. No, you are not too late. Until this sell side liquidity is not taken, you are not late. So is that immediate reaction? Absolutely, that is immediate reaction. So you will take your entry over here to this fair value gap. You will cover this order block only. This order block you should cover, because market can retest that order block one more time. So you should cover that order block, and you should target this extreme on now. Now you can say, brother, you told that I should not target the extreme liquidity. Why I'm going to target that extreme liquidity? Because now market is very near to that extreme sell side liquidity. You don't have any other opportunity to take the partial. But obviously, if market give you another opportunity, take that sell side liquidity. Take that partial. So if you look over here, after trading this area, market fall here, and then it has made some consolidation. Very little consolidation, but still the consolidation. Then take the consolidation. So over here, you should take a partial below that consolidation. So that should be your partial. And you can see after taking that partial, market went higher. Okay, so actually here this low was the partial area, and if you see over there, still not a good setup. 1:6, not a good setup. I know. But after here, what happened? Market went higher. Now remember, when you are watching the 15-minute chart, I told that when I will be in 1-minute chart, I will talk about the price action, and you have to understand that, and you have to follow this. If you follow this, then you will be able to be consistent profitable trader. Then what happened? Market went higher. What a dramatical move, right? What a nice move. You have to let this move go. When market is going higher, you should let it go. Why? Market is below this last parallel gap. You know market should take that sell side liquidity. Market didn't take that sell side liquidity, and now it is going higher. This is the trap. Why market is going higher now? Remember this entry parallel gap from 15-minute chart? Remember, market has made this relatively equal highs. What has done? Market has taken this buy side liquidity, tapped to this entry parallel gap over here, also the bullish parallel gap from 15-minute chart. Then market went higher. Okay, sorry, there was no bullish parallel gap actually. From 15-minute chart, it was the 1-minute entry parallel gap only. Okay, I took that entry and I uploaded it to my Twitter. I will show you the execution, don't worry. Then market went higher one more time. Tap to this 15-minute entry parallel gap. Nobody closed outside of this 15-minute entry parallel gap. Remember, from the 15-minute chart. But from 1-minute chart, what do you see? It reached until that area. Why it has reached until that area? This is the constant encroachment of that 15-minute last bullish parallel gap, which is working as inversion parallel gap. So if really market would love to fall, it should work with the lower portion of this parallel gap now, because this is the inversion parallel gap. So the body should be stayed inside the lower portion of this parallel gap. At the same time, why this wick went until that area? Look your left. If you look on your left, you will see a parallel gap over here. What is that parallel gap, brother? From 1-minute chart. What is that? Random last parallel gap, brother. To that specific leg, this is the last parallel gap from 1-minute chart. It tapped to this last parallel gap. Body closed below the constant encroachment. then market fall. See, now one more thing you have to understand over here. What is that? As I told, first market will reject from the constant encroachment. Don't just think that market has done its job. Then market went lower, come back again. Where did it came? To the low of this fair value gap, last fair value gap from 15-minute bullish fair value gap. So you please mark all of this fair value gap and match the information I'm telling you. If you just watch this video and trying to learn this by watching my video, it's not going to help you. Trust me, brother. So you have to go to your chart, you have to mark them, and then you should uh, understand the price action. Okay, so do this homework, otherwise you are not going to be benefited by my video. First, constant encroachment rejection, come back again to this low of this fair value gap. When it tapped to this low and rejected from there, I'm not so confident. Now this is one kind of setup I have explained in my YouTube channel long time ago. I can frame my set trade from there, but I'm not interested to show you right now and not interested to talk about that one as well. Okay, tap to this 15-minute bullish parabolic up low, rejected from there, went lower, make the swing low, which is valid for shifting market structure. Over here, this low, okay, there, this is your market structure shift. Look at the displacement. Was it so good? Absolutely. Mark your entry parabolic up. Why you are marking sell setup? Because you know market is going to take the sell side liquidity over here, because market is below this last parabolic gap. This is the entry parabolic gap. Where is your breakaway gap? This is your breakaway gap. Okay, so very nice breakaway gap. Let me mark it as a breakaway gap. Is that an immediate reaction? Absolutely, brother, that is an immediate reaction. So I'm gonna take my sell over there. I'm gonna cover this breakaway gap. Should cover the constant encroachment, but if you just cover the breakaway gap, that is more good. Okay, what should be your target? This extreme sell side liquidity. If you would love to target that extreme sell side liquidity, you have to look for the last parabolic gap for the partial or relatively equal lows for partial. Okay, now if you look over here and the time, what time is it? Very near for closing the session. So that means market has no time to tap to the last parabolic of something, then go for the buy side liquidity, because it doesn't have any buy side liquidity except this extreme buy side liquidity. And now where the time right now is near about very near for the 4 p.m. market doesn't have the time, so it has to finish its job that is unfinished around that area, strongest liquidity. So I don't need to take the partial, but at the same time, if you would love to take a partial, you can obviously take the partial around that area. Okay, because this is the only fair value gap you have, and also the some lows around that area. Okay, so over here you can take a partial. Here, what is the risk to reward ratio? 1:5.5. Was that bad? I didn't take this entry. I was watching some drama actually in YouTube, because I'm really so bored by taking lot of entries today and to show you the precision again and again. Now I'm going to show you the executions from the London session to until the PM session. Okay, so let's go to the London session at first. Okay, so here, so this is the London session. This is my first setup. I took 2 contract entry over there and added to 3 more when it actually came to this fair value gap over there, and then I closed it around that area. That means the setup was around from here, stop loss was around that area above this fair value gap, and my target was over here. I don't remember actually what was the reason to target over there. I really don't remember, and I have already explained that to my last video where I explained this London session. Okay, so that was my first trade. Risk to reward ratio was near about 1:2. Then I didn't do anything over here. I wasn't here actually. Then this was the setup from my live. If you are with me in my live, I have outlined this setup after taking this buy side liquidity. Let me mark the setup actually. So after taking this buy side liquidity, market has traded some random level. Okay, very random level, don't worry, I will show you the random level. This is the last fair value from 1 minute chart. Then I got the market structure shift over here. That was the market structure shift. This is your fair value gap around that area. So let me mark the fair value gap. This was the fair value gap. I just took some partial, then got stopped out over there somewhere. That was another entry. You can put a stop loss over there, and target was until here, somewhere here. Okay, I don't remember exactly where was that, but that was the next entry. Then I took another, I framed another sell setup from the 15-minute last fair value gap. So here that was also in live. I just outlined it, and then because of the load shedding, I was out of the market. Streaming. After taking all the buy side liquidity rejected from the low and the consequent crossment, gave me the market structure shift over here. That was the market structure shift around that area. This was your fair value gap over here. Sorry, not that one. My mistake. Here, that was your fair value gap. Because of the load shedding, I was little late. I took my entry to that candle, and your stop loss should be above that high. Where should be your target? This last fair value gap, okay, or the entry fair value gap, wherever you target, that can be your trade. You should take a partial when market will go below this low. 6 to 1 handle near about. Risk to reward ratio is 1:3.66. Then this was a buy setup because this last fair value gap was holding the price, so there was market structure shift over there. This was the market structure shift. After taking all the liquidity from 15-minute chart, it has been rejected from the high of the 15-minute last fair value gap. Okay, that was your entry fair value gap around that area. That was your entry fair value gap. So I took a buy over there from that fair value gap. Covered just this fair value gap because I was unable to cover this one. It is near about 38 handle, so I was just covered that on that fair value gap, and if I got stopped out, I would be very happy. I was expecting that market is going to take this relatively equal highs around that area. See this relatively equal highs. I was expecting market is going to take that relatively equal highs, but at the same time it will retest this order block from 15-minute chart. So market didn't do that, and I got stopped out over here somewhere. Okay, so there was a trap until here. Okay, so it's not a good trade. It was just think this is the break even. Okay, that was just a break even. Then I framed a sell setup over there. I took sell over here. I got stopped out over here. The reason was my stop loss was just above that high. See this high, my stop loss was above there, and I have targeted this low, the extreme one, but I took, obviously my plan was to take the partial. I got stopped out because of here, because of this small run above this high. I got stopped out. I took re-entry over there, just re-entry. So look to this candle, I took re-entry over here to contract, and I just took partial when market went below this low, little lower, and then I got stopped out with lot of profit. So I'll just mark it over there. That was near about 2 is to 1 is to 2.5. Then here I took re-entry around that area to this specific candle. Just got the market structure shift. I was in the market. My stop loss was just above here. This was my target, extreme target, but at the same time I took partial when market was closed below this low. Okay, so actually I took a partial over there near about 1:8. Then I took this buy. I told in my Twitter that this is clean buy side liquidity. Mark that one. Market is going to take that one. So I took entry from this entry fair value gap from 1-minute chart. So I took entry over here. My stop loss just covered this fair value gap. This buy side liquidity was my target. 1:2.31, not bad. And then I just, as I told you, that I was just bored, okay, to take entries. How many entries I took? Just look over here. 1, 2, 3, 4, 5, 6, 7, 8. There was overall 8 trade. I just took 7, okay. And how many times one guy can be right? how many times one guy can be right? Did I take only sell, or did I take sell, buy? I did everything over here. Did I do everything? Everything I have done. But how do I know that it's going to work like that way? This is what I'm trying to teach you guys. Okay. So if you watch this video maybe 1 or 2 times, I believe that it's gonna help you a lot. And if it really helps you, don't forget to give me the thumbs up. I'm just asking for your thumbs up, okay? And if you are new, please don't forget to subscribe to my channel. So welcome to the wizard world. You are going to be the wizard very soon. Best of luck, guys.